At the request of one of the members in my Skool community, I'm making this video in response to the question they had for me, which dealt with what are they supposed to do after they've sold a cash secure put and the shares actually got assigned to them. They're not sure what to do. Well, first and foremost, when you're an options trader and you're selling a cash secure put, you should only try to sell options that you would be interested and you wouldn't mind owning the actual underlying shares. That way, if the option does get exercised and you are assigned the shares, you're going to be getting the shares you want at the price you specified. Whether or not it's for a long-term buy and hold, or maybe as part of a wheel strategy. But for this video, let's assume that the trader doesn't want to actually hold on to the shares. They'd actually like to get rid of them. And so that's why we're going to take a look at using these shares acquired through an assignment from a cash secure put can be used to immediately turn around and use them to sell a covered call. Don't forget to join my free user community. If you're a new beginning trader and you want to learn how to trade stock options so that you can generate a regular weekly income, this is the place to be. You'll learn simple low-risk strategies like selling covered calls and selling cash secure puts. Over in the community classroom, I've got step-by-step lessons as well as checklists and other helpful information. Plus, you'll have a community of supportive individuals, of traders made of people just like you and me. So you can start small earning $10 a month or $100 a month and eventually scale that up to $1,000 a month or more. It's simple to join my Skool community and it's completely free. Head on over to skool.com/simpleoptiontrading. I'll leave a link in the description down below. Well, one of the things a trader can immediately do is use those shares that have just been assigned to them and turn around and use those same shares to sell a covered call. Now, for some of you more experienced traders, you'll recognize this setup as part of a wheel strategy, where the shares get assigned to you as part of an assignment from a cash secure put, and then you immediately use those shares to sell a covered call. And so that's what I'll be doing in this video, is showing how I was assigned shares as part of a cash secure put for symbol SMCX. And then I'm immediately turning around and using those shares to sell a covered call. So I've opened up the trading platform on my brokerage account, and you can see here for stock symbol SMCX, I currently hold 100 shares in my account, and my cost basis is $37.75. Now I'm looking to sell a covered call using these shares as my collateral. Let's jump over to a daily chart, take a look at where the stock is currently trading at. And we can see the price is currently trading at $49.50. It's up, looks like 12.5% or almost 12.5%. I've got a resistance line right at $57.02. So what I'm looking to do is to sell a covered call right around this $57 mark, or maybe $58 as my strike price. So let's go ahead and take a look at the option chain. So I'll click back over to my brokerage account. I'm going to select Trade SMCX Options, and I'm going to be selling a covered call. And it looks like the earliest I can go is November 21st, so that's roughly a 30-day option trade. And if I go to the $57 or $58 strike price, which is here, we can see that the delta is 0.46. That's actually pretty high. But also what I've noticed is that it has a very low open interest. So not many people are interested in trading this particular ETF, which means the liquidity is pretty low. And so I may have a hard time buying and selling and trading this particular option. So let me see if I can find a better option with a higher open interest. So I noticed at the $66 strike price, the delta is 0.36. It's still pretty high, higher than what I would like, but the open interest is 267. And it's currently paying $4.75 per share as the premium payment. So let's plug in the values into my covered call analyzer. So today is October the 20th, and I'm going to be trading symbol SMCX with an expiration date of November the 21st. Now I selected the $66 strike price, and it was currently paying $4.75 per share as the premium payment. And if you recall, my cost basis was $37.75 per share. Well, the current market price is $49.59. I have exactly 100 shares, so I'll be using them to sell one option contract. Now with an expiration date of November the 21st, that means the length of this option contract is 31 days. So it's a 1-month option trade. Now if this option contract gets exercised on or before the expiration date, I'll be paid $66 per share, and my cost basis was only $37.75. Giving me a profit from the price appreciation of $2,825. Now, when I sell this option contract, when it gets filled, I'll receive $475 as the premium payment, Remember, that's $4.75 per share times the 100 shares. And that $475, well, that represents a 12.5% return on my investment. Let me just interrupt real quick because I get some comments from people asking how I computed that return rate. So let me show you by bringing in a calculator real quick. All right, so if I receive $475 as my premium payment, I'm going to go ahead and plug that in. And then my initial investment, remember, I have 100 shares, and my cost basis was $37.75. For the cost for those shares then is $3,775. So I'm going to take the $475 and divide it by the $37.75. And this shows me that my return on my investment is just over 12.5%, 12.58%. So that's how you quickly calculate the return of the investment from the premium payment based upon your initial investment. Now, if this option contract does get exercised, I'll receive the premium payment of $475 plus payment for my shares of $66 per share. And so my total profit potential would be $3,300, giving me a return on my investment of just over 87% for this 1 month trade. So to execute this trade, I'll come back over to my trading platform. So I'm going to select the option price of $66 and I'll press continue. And then now we can specify our asking price. I'm actually going to ask for $5. Currently I can see that the bid ask spread is from 420 to 530. I'm going to go ahead and ask for $5 per share. And now I can press review the order. I can verify that I'm agreeing to sell 100 shares of SMCX at $60 per share on or before November 21st. And in return, I'll receive a premium payment of $5 per share. So I'll go ahead and submit this order and I'm done. So I've placed my order. Now I just have to wait for the order to be filled. So what I've just shown you is the second half of the wheel strategy, right? So I initially sold a cash secure put. That option got exercised and I was assigned the shares. So now I have 100 shares of SMCX. Now on the second leg or the second portion of this wheel strategy, I'm going to use those same shares that I was just assigned and use them to sell a covered call. Now I walked you through the steps. I showed you the covered call. We looked at the chart and determined a strike price of initially $57 or $58, but we saw there wasn't enough open interest. Plus the delta was pretty high. It was a 0.46, which means there's roughly a 50% chance that this option would get exercised. And so I selected a higher strike price of $66 that had a lower delta, 0.36, and a lot more open interest. So it should be easier for me to buy, sell, and trade this particular option. After I submit the order, now I just need to wait for the order to be filled. And when the order gets filled, I'll receive a premium payment of $5 per share for my 100 shares. In other words, I'll receive a total premium payment of $500. Well, that wraps up this video. I hope you learned a little bit. And for my community member, that's what you do when you sell a cash secure put and the shares get assigned to you. You can immediately turn around and use those same shares to sell a covered call and collect another premium payment. And for you veteran traders, as I mentioned before, you'll recognize this as a wheel strategy. Thanks again. I hope you enjoyed this video, and I hope to see you in the next one.